Well, good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Tuesday, the 3rd of October, 2023. Wow. So as I step back, there is some green on the screen. So not everything was a loss. GDX, to my amazement, was up today. Copper down. Silver up a little bit here. Not in the futures, but they did it in this part of the market. XOM had an up day today. Not too much here. OIH, oil still coming up. Now in oil, tomorrow's the OPEC announcement as to what they're going to do. The market widely expects them to continue with the program they have of these production cuts per se. Those cuts are not what they seem. We found out today that Saudi Arabia and Russia did produce more oil in September. They weren't telling anybody, and about 800,000 barrels a day at times they were getting out there. Were they trying to hold the market from getting too strong? I don't know what their thinking is, but they were doing that, so it's important to keep that in mind. Now, Walgreens was one of the markets up today, up 13 cents. The market has come out of this big monster drop. Remember, this is a chart that in April was at 36. It was just down into the $21 area. So to get a bounce, it's going to be oblivious to things because it's been so damaged. The short-term trend, though, is up. Higher lows, higher highs. Now, if you're a regular viewer of my morning subscriber video, I had gotten my shot, my COVID Monday. I woke up today, and I'm telling you, I didn't feel good. And sometimes you get a reaction to the vaccine. I had one. So I tried to do it, and I just said, I'm not in the mood, and I passed it. But I'm here for you right now, and I'm tired. I mean, that's what it does sometimes. It knocks you out. And I know you're going to say, oh, I'm not going to do it, and that's your right. But I want to do it. If I get COVID, it'll be, for me, I believe, milder. Higher lows, higher highs. Market is over the 18-day average of closes, so the bias is up as well. And the first real resistance is just above us, 30 cents now, 22.85, and you're already overbought. So I think that what we've done is we've established a short-term trading bottom. It could be bigger than that over time. We'll look at the weekly chart at the end of the week and get a feel for that. And the market looks to me like it's through temporarily downside. That's one of the few charts I can say that about. Rivian gave everything back up. Remember, it had great news just yesterday, outproduced the amount of cars people thought and so on. But this interest rate story that keeps getting worse and worse and worse with higher and higher rates, higher and higher auto loan rates, if you can get one, so on and so forth, it's going to weigh on the market. And it didn't help any market today to see the dysfunction in the House of Representatives. I mean, we made history, all right? Never before has a speaker been removed. He vacated the seat. He didn't leave it. He was thrown out of it. And now the question, who's going to come in? Will they be able to get people behind them? You knew the Democrats were waiting to throw him out. I kept hearing people say he'll get together with them. Nobody voted for him. And McCarthy did lose, I think it was 8 Republicans. Originally, it was going to be 6 against him, 8. So he's got some real enemies there, all right? And he didn't win that battle, and now he'll become, I hope, a senator and give up on the speaker part. They're just waiting for you, and it's going to be miserable. I hope you see that. In any case, no real trend at this point. When we come to the United States Gasoline Fund, all right, we're down to the first area where the market should find or attempt to find support, the 100-day average of closes in green. If we give ground by very much here, then the 62.84 area is the next spot. But this is the one that I'd be looking at thinking the pros are going to do some covering of shorts right in front of OPEC, whatever it's going to be. Who knows? We'll see. In ULF, the financial services, they're just getting creamed. And of course, you keep reading that as interest rates are going higher, the banks, if they don't have other facilities to make money on, they have to pay a lot to keep those deposits. What they're making on them is going to be very, very minor. They need to be lending money, and they can lend money at good rates right now. So we'll see. But the market is just looking at it saying, no, that's not the case, Ira. And I got to tell you, you've got to get nervous here. If that 18-day average of 33.98 closes under 33.81, it's a classic bearish setup. You then have the shortest average, the 18, under the 100, and the 100's already under the 200. Wherever you're at, I think you'll go lower. That typically what my experience has been is that's what I look for. When I look at the industrial sector, you got big problems here. Higher and higher rates. Yet, did you see the JOLTS report today? That's the jobs and the turnover rate. My God, it jumped again. So employers are looking to hire people. I would have swore that thing's going to just keep slipping away right now. I'm sure it's got Fed members doing this. What the heck? How did that jump with interest rates and all? But you're coming down here. We're seeing that Ford and GM today, I think combined, got rid of 500 people. Not much you can do with that. In AI, as I look at the market, you've got lower highs, lower lows, the market having a real problem right through here. In RSP, as you're coming down for the consumer discretionary, just falling away right now, nothing that's constructive there. And in home builders, where are they going to get money on this? It's going to be a real problem for anybody to go out and get money and do very much. Lower highs, lower lows, staying with the embedded reading. XLE, higher high, lower low. Energy just sort of drifting around. GLD, just slipping away at this point underneath the area here where it might embed, and that's going to get even worse. Why do you want to own gold? That becomes my first problem. It doesn't pay interest. You're tying money up. You can take that same money and make 5.3 to 5.6% blindfolded, do a little work, maybe even 6%. You can see what the market's doing there. SLV, lower highs, lower lows, and definitively oversold. Copper market, all right. China's just got nothing but problems, and maybe we do. I mean, as these auto strikes and other strikes go on, how much less copper are we going to be using? Copper's used in basically everything, so you got to think that through. But the precious metals, the industrial metals, they're in big trouble with interest rates this high. 4, 7, and 7 in 10 years? Oh my God. All right, UUP. Dollar just gets stronger. We're paying the high interest rate all over the world. I need your dollars to buy your treasury instruments. I want to be in this 5%, 6% game. And that's what people are doing. And they're dumping their euro because of it, going, hey, you guys, you may be able to stop. I don't know. What are you going to do with the U.S. as it's got its where it's at? The problem in the euro is it going to go down to parity, and it just might. So you put it all together, gives you an idea of the problems going on, and we'll see where it all carries. Now, I want to remind you of some of the stuff that we have here. Here's where we're at on the free offerings that we give you. All you do is you move your cursor over, and it's like a shopping list of goodies for you. Just give a click wherever you want of the different goodies. You'll fill in your name, your email address. We mail it to you typically the next business day or the day after that. We get you all set up. But there's so much to get here. Your guide to technical indicators, the Arun indicator, pivot point courses if you want them. All these different things that you can get from us, and if you haven't looked at them, you owe it to yourself to do so. But the one thing I want you to get is your price counts. Price counts are super important. Price counts do not tell you where to get in the market. They tell you the roadmap of where the market may go, along with the probability of reaching there each step along the way. Very important. I use it all the time. I didn't for many years when I first learned about it, and finally I incorporated it. And there's in a day of the week I don't look at it. Okay, I don't trade off it. That's not what the tool's for. But it keeps me from saying, hey, I'm at what we call a fourth count. Why am I trying to get long up here? It doesn't make sense. Going for the first count, high percentage. So how do you get it? Move your cursor to the top, give it a click. That's one way to do this. What else? IraEpstein.com, free offers. Pretty simple. I'm Ira. I'll see you tomorrow. Take care.